morning, everyone. Thanks for attending the Place Your Trades Network Spaces covering international oil policy. This Spaces is brought to you by TraderBait, which has a custom web app dedicated to trading CME Group's new daily option contracts. You can use the link in my Twitter stream to get the TraderBait app for free. I also write a weekly blog on energy, on markets in general. that you can find at placeyourtrades.com. That comes out every Sunday. That is free to subscribe. And then over the next month, or over this month, Place Your Trades is giving away a trip to Las Vegas to go see the Money Show on April 24th to April 26th. So one winner will get to join the Place Your Trades team at the Money Show. All you have to do is go to placeyourtrades.com/Vegas and sign up before March 1st. That is also free to sign up for. So go sign up and win a trip to Vegas. Now let's introduce everyone. First, we have Ellen Wald, who is president of Transversal Consulting, guiding businesses in various industries on the confluence of energy markets and geopolitics. She writes a weekly column on geopolitics and the energy markets at investing.com. And she also regularly contributes to a variety of other publications, including Bloomberg, The Hill, and Barron's. She's a senior fellow at the Atlantic Council's Global Energy Center and a fellow at the Canadian Global Affairs Institute. She also is an author. Her book, Saudi Ink, is available. AM is amazing. I read it. She conducted significant research on geopolitics and energy markets at the American Heritage Center at the University of Wyoming, the National Archives, British Petroleum Archives, and British National Archive. Her PhD dissertation was entitled The United States, Great Britain, and Middle Eastern Oil History, 1945 to 1960. Next, we have Chris Stevens, journalist extraordinaire. He's currently freelance for The Guardian and petroleum economist. He's former journalist for former correspondent for The Guardian, former Guardian correspondent Libya, Tunisia, Bosnia, and Romania, former Scotsman correspondent USA, former Scotsman Irish Times correspondent Russia. He's also a noted author. His book is Judgment Day, the Trial of Slobodan Milosevic, and from Atlantic Books. Next, we have Jose. He's a political risk and oil analyst. He's regularly on Bulk Intelligence. He's been quoted in EI, Forbes, S&P Platts, Wall Street Journal, BBC Persian, Petroleum Economist, and Newsweek. He's also consultant for V Energy in Venezuela and OHM Research. So welcome, everybody. Thank you for taking time out of your busy day to come talk to us. First, I will start with Ellen. I kind of wanted to start in the U.S. first with this Inflation Reduction in Quotes Act. I kind of want to walk us through this EV tax credits and charging infrastructure and how realistic is this, especially in light of we have charging made only in the U.S. How is this going to be possible? We don't even mine enough metals for all of this.
Yeah, and thanks for having me, and thanks for the wonderful introduction. I've generally been very skeptical of the parts of the so-called Inflation Reduction Act to either reduce inflation or accomplish some sort of green energy transition revolution, whatever you want to call it. There's a lot of skepticism, especially around this like Made in America clauses, because they basically make it so that you can't really access the greatest or the top tax credits for buying EVs, because very few qualify, because we don't make that much in America to begin with, and we certainly don't make that many components of EVs. So it's a big issue, and it's one of those things that like makes it look better than it is. And I always wonder, and I'm not a modeler, but I definitely look at different models and forecasts, and it's so when these forecasts for, say, energy demand and oil demand take into account these kinds of like the Inflation Reduction Act, and they assume it's going to play out a certain way or as it's written on paper, and then they put that in their model, and that spits out a number for, oil demand in 5 years. You can't really take it seriously because everyone, on the ground knows that that's not how it's going to play out. And the whole charging station thing is a huge issue. And one of my favorite parts of it is how they want to put all these charging stations in like low income, disadvantaged or development community areas. So, okay, that sounds great, but do people who buy EVs or want to charge them really want to charge them in those areas? Is that going to be beneficial for anyone? Is it going to be used? And then one of the other issues that I think is really not brought up is the fact that a lot of these, to do the fastest and the best charging, you need to have these high voltage lines. Well, a lot of communities don't want those high voltage lines put in, right next to them. So you end up getting people like fighting this because they're like, we don't want these high voltage lines. So it becomes really, really difficult to get this infrastructure in. And, a lot of people try to make the comparison with gasoline stations. And they're like, well, people, gasoline stations came up and people drove cars. And, it's not like you have to have a huge network of gasoline stations before people started to buy cars and drive them. They kind of, work together. So we don't have to have all the charging stations in the world in order to get people to drive EVs. But I don't think it's really analogous in this case because building a charging station is not the same as like setting up a little gasoline station on the side of the road. And I think that you can't necessarily compare that historical process to this process, especially when it's being pushed so much by the government, because it's not really profitable. It's not really like a necessarily good business model. And I'll add one other thing about the charging stations. You have to really be aware of, okay, so what is actually providing the electricity at these charging stations? So, I was talking recently with Dr. Gene Foreman, who's the chief economist for API, and he said that he was speaking with someone in California who was saying it's a person who I think delivers diesel fuel or a diesel fuel operator, and he said a lot of his customers are actually these charging stations because they can't get the high voltage lines to get charge from, say, like power plants. So they basically run on generators. So when you go and you charge your Tesla at some of these places in California, you're charging off electricity that's being provided by a generator that probably runs on diesel. So there you go.
So, all the irony, right?
Exactly.
All right, so which is hysterical. And then I kind of wanted to go on a little bit. I wanted to talk a little bit about, we're kind of seeing this shift in the narrative a bit away from ESG. In fact, we had Saudi Aramco's top official warning this weekend that an increased focus on climate was undermining investment in oil and gas to the point where it now poses a threat to the world's energy security. And we've also seen the IEA sort of change their tune a little bit and ask producers to produce more. And I know you've been very vocal on ESG. So how is this, narrative affecting the industry? I mean, we know that it's brought about, we saw, what's happening in Europe, the crisis last year, which I think it's not over yet. But how do you feel about this? I kind of feel like there's a slow shift in the narrative. Are you seeing that? And can you talk about a little bit about ESG so people that don't really understand it may understand it a little bit?
Yeah, that's a really, really good question. And I definitely think we are starting to see a shift in the narrative, but it's really coming mostly from people who don't really have skin in the game, like Aramco CEO. He doesn't need to worry about ESG investment at all. It's not affecting his company. It's not affecting his share price. He doesn't need to worry about this. And so it's not surprising that he is someone who can go and speak out about this. He's not worried about getting like disinvited from cocktail parties because he's vocal about the need to invest in fossil fuel development. the way other people are. So, and so I think it's interesting though that he's becoming more vocal about this, and it reminds me of something that Suhail Mazrui, who's the oil minister for the UAE, said several years ago. I think he was at the Calgary Stampede, maybe, and he made a comment about how this was back when oil prices were really, really low, and he made a comment about how this is going to be a big problem for investment in the future. We're just not going to have enough, because prices are so low, no one's investing, and this is going to be a problem for years to come. And I think that the low prices have really, are being this lack of investment from that period. And now we're seeing this push, this so-called ESG push. And I want to unpack that a little bit because I think a lot of people use the term ESG to basically mean anything climate related, when ESG, that's not necessarily what ESG totally means. So, like ESG investing, and I'm going to be totally upfront here and say, like, I'm really, really cynical about ESG investing. I think it's basically a scam. And so, I don't know who is listening to this, and you can definitely feel free to disagree with me, but I'm of the opinion that it's basically a scam. It's a way for fund managers to attract more clients and get more money, and also to charge more for their products that they're selling. And it's probably creating a bubble that may or may not burst soon. So that's the kind of investing part of it. But the other side of it is this like climate litigation legislation ban that purports to ban the sale of internal combustion cars, or legislation where they're trying to ban new natural gas hookups in new construction, things like that, or debanking. That's another really big one. And I think that those are a much more serious threat to energy security and energy development than just like ESG funds that are being offered by like BlackRock, or what BlackRock is doing. BlackRock is a perfect example of a institution that's basically that's basically making themselves this veneer of climate like activism, when really they're making just as much money off of fossil fuels and fossil fuel companies than anybody else. I mean, BlackRock is a big investor in Aramco's pipeline lease back, and it did the same thing with the UAE, and they made a lot of money off of that. Yet they're all going around saying like, we, want all of our funds to be ESG compliant, and we're going to wind down our investments in coal companies. But then when you look at the actual standards and what they're actually saying, they're still investing plenty of money in coal. Like, they're not really stopping. So I think that this ESG investing thing is much more of a kind of veneer that, doesn't really mean that much. But the climate litigation stuff and a lot of the stuff, the regulations in the EU, that's, I think, much more serious, because that really can impact, whether companies have the money to invest in more things. I mean, there's so many jurisdictions in the US that are trying to sue oil companies for the effects of climate change, when, for like the past, 70 years, when they promoted them, they were more than happy to buy their gasoline products. So to me, it's like these lawsuits are very frivolous, but you get some kind of like activist judge, and you get these you get these prosecutors or these attorney general who want to make a name for themselves, so they pursue these lawsuits. They're very expensive, they're very time consuming, some of them go all the way up to the Supreme Court. And the end result is these companies like Exxon is like, why do we want to invest in developing these resources if we're going to have to fight these annoying lawsuits all the time? Let's just spend our money in Guyana, where they actually want us to develop their oil. I mean, I totally get that mind frame, but it's not good, because it means that you're leaving a lot of assets on the table. You're not investing in assets that would be good for American energy security. And then you get the Biden administration going out and basically saying, big bad oil companies, you're returning money to your shareholders instead of producing more oil. Well, if I was the oil company, I would say, Well, first of all, that's what a business is supposed to do. We're designed to return value to our shareholders. That's that's the whole basis of and our whole point. But also, you are making it very difficult for us to produce oil. You can't just say we've approved tons of leases that you're not using. Yes, you may have approved them, but we don't know what the methane regulations are. We're not going to invest in new infrastructure if we have no idea what kind of methane we're going to be allowed to emit. We're not going to invest in drilling more oil if you don't approve the new pipelines to be built to take away all the natural gas that's going to be produced, as an associated natural gas, because we're not allowed to flare it under your methane regulations. So, to me, it's like they say these things because they want to look good and they want to blame the oil companies. The oil companies, in my opinion, do not do a good enough job fighting back. And part of that may be because they're not really worried about not having a market for their product, right? We're all going to keep buying gasoline. We're all going to keep doing this. The EV market is not really threatening them at this point. So, but they are losing the hearts and minds war, and they're losing the policy war. And in my opinion, that really is a threat to them. And I think they really should do more to fight back publicly because, right now, the other side's the only one doing the talking.
So the long and short of it is that basically this ends up in higher oil prices for longer, right? Because there's just not enough investment.
Oh, I would say that we're definitely looking at this possibility because unlike what the, BP survey says, where they predict that somehow global demand is going to plummet, every real indication is that global oil demand is rising. We're going to just see more demand from China. Do we know exactly when that demand is going to start rising? I think we don't, and I don't think it's going to be immediate. I think that people are a little bit confused because there was this idea that Chinese demand was suddenly going to skyrocket, and it hasn't. I think it's going to be more of a slow trend upwards, but it's going to go up. Demand from India is going to rise a lot, but and demand from Europe isn't going to go down that much. Demand from the U.S. certainly isn't going to go down. So it really, to me, it's a recipe for a very problematic future, and meaning that oil prices are going to be much higher, probably in the long run, unless we kind of get our act together.
I'm kind of running out of time for that.
So that's true. Yes, we're definitely running out of time for that. And there's always something like a global recession that could kind of buy us some extra time, but
Yeah, I think that's what they're trying to do.
But I wasn't going to go that far, but I would definitely entertain that as a very viable idea.
All right, so I'm going to move on to Chris, kind of switch gears a little bit. Let's talk about this Russia narrative, right? We all know that, we have oil sanctions. We just had petroleum or product sanctions just come on. We have a price cap come on. So, can you kind of talk us through the Russia effect and how sanctions are having an impact on oil and gas and related finance?
Yeah, sure. And first of all, I'm coming off a cold, so I apologize if I sound more gravelly than I normally do. But I'll try and talk slowly. The Russia effect, basically, a couple of years ago, I don't know, it's about 4 years ago, the EIA produced this report looking at gas usage, supply and demand, looking ahead 10, 20, 30 years. And they predicted that no matter, even though demand was going to go up, particularly in China and Asia, that supply would go up way more. They looked at US shale, what was going on in Iran, the Qatari increases, and all these offshore projects all over the world. And they said, well, if all this comes online, that there's going to be way more gas than there is even at the most optimistic rise in demand. And of course, the report says it doesn't mean that this gas will just be floating around. What they were basically saying was, if you're an offshore person, watch out. And I sort of used this report in a thing I did for a company in Tanzania to say to them, look, the president of every country, they find themselves an offshore field and they think we're in the money. And I said to them, well, you're not. That oil's probably going to stay, that gas is going to stay where it is because you just can't beat the Russians on price. Now, when the sanctions came in, it's been like this brick through a plate glass window that you suddenly lose this massive demand. And sort of going back to the report, oddly enough, if you take out the Russian supply, the graph now shows that there's about as much gas as is needed. It's not a perfect fit because of course China and India are going to buy Russian gas anyway. So it's not as if all the gas in the world will find this market. There'll still be more gas. This will be a problem. And of course the other thing is it doesn't mean offshore's got cheaper. So it's the price is going to be just as high as it was before, which is higher than Russian gas. And it's something that people are not thinking about enough, that Europe is like, oh, we're saved. Thank goodness we've got all this LNG that we can get and everything, but it's going to cost them more. And that's going to have an effect. Maybe, I don't know, there'll be other energy or more green stuff, or people will use less of it. We'll let to see. But the bigger effect I've found is that anyone, anywhere who's got a gas field, it's like gangbusters. And particularly in the East Med, if you look at the East Med and the Zohr field of Egypt and Cyprus, Israel, they'd all been sort of scaling back even a couple of years ago. And it was partly because of the political thing, that the Greece, the Turkish kind of stake that had made things difficult and the navies were squaring off. But the real thing was, and drillers would tell me this, they would say, we just can't beat the Russian price. That have this plan to put this pipeline from sort of Cyprus to Greece and stuff, and it was going to cost like 7 to 13 billion, or building these LNG plants which are 2 or 3 billion a pop. And they would say to you in that sort of moment of candor, this is never going to happen because we're going to have to pop this onto the price, which again makes it too expensive. We just can't compete with Russia. This stuff is going to stay in. And you could see like Total and Eni sort of scaling back off Cyprus. Well, you scroll forward 12 months and take a look at the situation now. I mean, there's so many drill ships off Cyprus. And even Lebanon, which has a sort of tiny corner of the East Med gas, has suddenly activated with Qatar going in with some investment. That everybody who's anybody is getting in on the game. And Eni, Italy's company, I mean, they're front runner, and very smart of them too. They've got the East Med stuff, and they're the leaders in the offshore for Egypt, but they've also just done this Libyan project, and this Libyan project, it's off the Tripoli coast. It was discovered in 2008, and there's nothing particularly difficult about getting the gas out. They've already got offshore oil rigs further out. It was about 70 kilometers out, and they've also got a pipeline that already goes from Libya to Sicily. The reason Eni delayed was because of security and price. Well, Libyan security is still pretty abysmal, and they're on the cusp of a civil war. But, price has now become a fantastic factor, and Europe suddenly needs this gas. So Eni has decided to push the button. Same thing in Algeria. Everywhere you look, Tanzania, Mozambique, Senegal, everyone who'd been gloomy 12 months ago is now incredibly excited. And this is having like a major effect on upstream. And it's hard to predict exactly how it's going to go down, but I mean, it's going to affect how people use energy, and it's also going to affect finance for energy and shareholders, bouncing right the way through all these different markets. And it was an interesting to kind of watch the realization, and it came about sort of April or May, when all the big oil companies realized that this Russia thing wasn't a flash in the pan, that these were going to be long-term sanctions and long-term changes. And obviously the explosion of the Nord Stream pipelines have sort of set the seal on that. But boardrooms all over the place are changing. So that's what I wanted to say about that. I have no idea how it's going to change, but I think it's going to have this, tremendous change. And if you're an oil company with a gas field, then, you're in a very happy place right now.
Yeah, I mean, absolutely. I think, I think it's really interesting you bring up Africa, because I've been kind of trying to talk about it, but not many people really want to talk about it. But, it does seem like there's a lot of opportunity, even though there's a lot of your thoughts on kind of the politics going on. I know a lot of people don't like to deal with, African governments per se, because there's a lot of corruption that goes on. But do you see that changing at all, or do you see, do you think that, there'll be investment regardless?
I think there'll be, there'll be investment regardless. I mean, I was talking to somebody who analyzes ENI about the Libya thing and pointing out that there's two governments, there's been a civil war, it's one of the most corrupt countries on earth, there's militias. And the guy said to me, yes, but Chris, this is the oil industry we're talking about. And I think that has to be baked in, especially people like ENI, BP, Total. They're used to operating in a what you might call a buccaneering way. And I don't think corruption is worse than it's been before. So I don't think that's going to have an effect. I mean, I may be wrong. But also, I mean, following what Ellen said, I feel the same way about the whole green thing, that green is great until it actually costs, right? Until someone's got a hard choice. Until you say to someone, well, okay, then don't take that flight. Don't buy that plastic. Don't do this. And that's when everyone gets, the sort of zero stuff kind of goes out of the window. Or anyway, that's when people have to have a hard choice. So if everyone's going to say, well, yeah, there's all this new gas, but look, we're going to go green and stuff. Well, if the green can't take up the slack, then I think they won't, and certainly that's what oil companies think. They're fairly either realistic or cynical about that.
Yeah, absolutely. I kind of wanted to bring Ellen into this one as well. And kind of give us your thoughts on the Russian oil cap and the product and oil embargo in the EU.
Yeah, I think the price cap policy, I mean, and I've been pretty vocal about this since it was in its inception, is not a very smart idea. I understand that the point of it was to keep Russian oil on the market while limiting the revenue that Russia is able to get for that oil. But you run into a bunch of problems. First of all, it took them so long to get it in place that Russia had basically, developed ways to get around it with its new big-time customers. I mean, one of the things that we've noticed is that before all of this, and I was actually just on a panel about this, so I pulled some of the data, and this comes from our friends at Tanker Trackers. So I was looking at basically where Russia was exporting back in like April 2021. And it had just a very, very diverse customer base. I mean, the Netherlands were a huge customer. It exported to the US, it exported to China, but no one, its biggest customers like South Korea, China, were still like 13%, 9%. The Netherlands was 21%. It had just a host of, tons of other customers: Germany, France, Italy, Poland, Lithuania, Sweden, Finland, Singapore, so many that it was actually hard to get the graph to show them all. Then if you look at Russia's oil exports for, I'm going to pull up like November 2022. I did this January, but it's not totally complete. Russia's customer base is just completely shrunk. Now its biggest customers are China and India at like 28% and 38%. And, there are definitely some others, but that's mostly where it's exporting. And so that's both good and bad. It's bad because you've got all your oil basically in one boat. It's like all your eggs in one basket. And it does give the customers more say. So, India and China really want cheap oil. And, but at the same time, it kind of motivates Russia to, but you have to realize that it goes both ways. As oil prices get higher, India and China are going to need that heavily discounted oil even more. And so that does kind of put Russia in a position to, to extract maybe other things out of them. So, while it's definitely like a smaller customer base, and if you're just operating, purely on, a capitalist market, you want a more diversified customer base. But if you're Putin and you're dealing with China and India, it's not necessarily so bad that you have these big, markets. And as we've heard, Russia's finding ways to make up a lot of that lost revenue through all sorts of other ways, like selling insurance and shipping and trading, services. So there are a lot of ways that they're making that up. Yeah, it's not the same as, selling oil to Europe and basically like having them at your mercy. But I don't think that this policy has necessarily accomplished what they wanted it to accomplish. They keep saying it's limiting the revenue, and then we keep getting these, reports. Like there's just one from Goldman Sachs that says, well, actually, Russia's making a lot more money than we thought, because even though it looks like Urals is trading for this much, it's actually trading for more, or we think it's actually trading for more. And so it basically seems like they've put this these policies are distorting the oil market. They're making it less efficient and more difficult and more expensive. For what reason? For what purpose? And that's why I'm always saying, like, what's the point of these sanctions? What do you actually hope to achieve? And what metrics are you using to evaluate whether you're actually achieving it? Because otherwise, like, just get rid of them. You're just putting this weight on the oil market. That's my opinion. No,
yeah, absolutely. I mean, we had, you had, 2 decades of kind of 3 decades of, global oil flows, having their routes and everything was set. And now we kind of just threw everything into the air, right? Forget everything you've been doing for the last 30 years. Now you have to find totally new routes. And, we've seen ships have to go farther, to make deliveries, can't take Russian oil, etc. So I definitely agree. I think that's probably going to continue and will add to, sort of elevated prices. And then, we can come back and discuss EU. But next I want to go to Jose. I kind of want to talk about South America a little bit. And because we're seeing a lot of new leftist governments, particularly Brazil and Colombia in particular. Kind of walk us through how you see this impacting oil and gas, or if you do, or if you don't, kind of what policies are going on there. Because we did see, Lula initially came in and said, I want to get rid of oil and gas, but so far that's not the case. So can you kind of talk us through that a little bit?
Yes. Thank you, Tracy, and thank you to all the audience. And let me just apologize beforehand for any slow internet connection. I'm based in Venezuela, so how all this is here. So, well, yes, the situation in South America is kind of cloudy these days because of plenty of political risks plaguing different countries in the region. We have in Colombia the leftist president Gustavo Petro slamming again against the oil industry in the country. In recent days, he was announcing that he will ban all the new oil explorations in the country. So that'll be a big problem, but he will absolutely find opposition from the majority of the conservative sector in the country. That remains to be seen. In Brazil, as you pointed out, we have Lula just recently came in as president again in the country, and he named a new Petrobras CEO, who is a very polemic figure, practice with different topics to deal with the company and the countries, such as the fuel prices and the different problems. And last year, for example, that the company and the country faced with the fuel prices and the truckers' protests. So that'll be a big issue to deal with by Petrobras. We have the issue in Mexico as well. Pemex has been facing lots of problems with López Obrador, lots of accidents. The company has seen its production significantly impacted in the last years. We have the issue, of course, in Venezuela. But Venezuela, for me, even though that after many years of lack of investments, corruptions, and mismanagement, we have recently named new authorities in PDVSA. We have kind of a new investment opportunity here, but it will much depend on the political dynamics. We have presidential elections next year here, but the opposition is hugely divided. It seems that the government has all the advantages, but we have seen how recently the U.S. government has given away a new license to Chevron. But there's lots of investments to carry out here. But for me, there will be an important opportunity, but that will remain also for Caracas to handle the strategic position on how the Venezuelan government will handle its traditional alliances with Russia and Iran. Iran has been handling for months the refining problems with PDVSA here in Venezuela. Recently, Venezuela contracted the help of Iran to build 2 new ships for PDVSA. But that'll represent a significant opportunity, but that'll depend much on the political dynamic here. But the new kid on the block here definitely is Guyana. Guyana has seen a tremendous hike of its production in the last 5 years, more or less, seeing its production jumping to 350,000 barrels per day, at the end of last year, the very least. But for Guyana, the biggest challenge, of course, will represent how it will deal with all the riches, how it will, the Guyanese government will set a proper legal framework to handle all this new situation. That'll definitely be a game changer for the country. Also, so you have the case of Suriname, the Guyana neighbor, of course, a smaller country with a smaller outlook for its oil production, but definitely, for me, as I see it, those countries are the new kids on the block, considering the different problems. Also, you have Argentina, the case of Argentina. You have elections this year also in the country. The country as well has been experiencing lots of political, social, and economic problems, a turmoil with its currency, the peso. It'll be crucial to see how the political results of the elections this year and how it will impact for example, the development of its iconic the shale gas Vaca Muerta. Vaca Muerta has been an iconic shale gas field and production in the country. But definitely, as I see it, and the region, it'll be a crucial year for the region in terms of all the political risk, considering how corruption, how much the state has been involved in the different, oil companies' dynamics across the region. That's how I see it.
And I was actually talking about this with Ellen on DM. So there's somehow this idea that Venezuela can somehow replace Russian oil. What are your thoughts on that subject? And then I will let Ellen jump into.
Excuse me, I didn't get much your point. Excuse me.
The idea that Venezuela can somehow replace Russian oil.
Oh, okay. Well, it
in
could.
In terms of volumes and etc.
Well, a couple of years ago, when before the Russian invasion of Ukraine, there was a case running here, different circles that because of sanctions still going on, against the Venezuelan government and against PDVSA imposed during the former Trump administration, the void that that was left of our Venezuelan oil You know, the U.S. has been for years our traditional customer before the Bolivarian Revolution arrived here. But there was this, this story that notwithstanding how important the alliance, the strategic alliance of, that Russia represented for Venezuela, Russia took advantage of the situation that was running around because of the sanctions, and they took advantage that, they kind of ramped up, they're all experts, averaging 200, 300,000 barrels per day. But that by that time, Venezuela was not exporting. Was not exporting any barrel of oil to the U.S. But as I stated before, depending on on how the current dynamic with the U.S. and the Chevron, and if after this new license expires, the U.S. OFAC gives away another new license, maybe expanding new investments and trying to revamp the oil production, still stuck between the 600,000 and 700,000 barrels per day. Maybe we can, try to recover some of our spot in that traditional market, such as the U.S.
Ellen, I don't know if you wanted to jump in on that one.
Sure. I think it's a really interesting point because it seems to me, at least from conversations that I've had with people who are more kind of hooked into the policy sphere of things, that there's this idea amongst people who have been, developing these oil sanction and price cap policies on Russian oil that, there are a lot of like bad guys out there that we have under sanction, but there are like less bad people and more bad people. And right now, Putin has somehow risen to like Putin and Russia are like number one bad guy. And I find that this is like a really prevalent thing in Washington, but not necessarily outside of Washington. Like, I think if you talk to like other people in your neighborhood, they're not like that afraid of Russia. They don't think that like Russia is like the worst thing in the whole world. But in DC, like Russia is the number one enemy. And so there's this idea that, oh, well, we could maybe relax sanctions on other people who we don't see as quite so bad, and that'll help with this Russian oil situation. And I think that that's kind of a slightly delusional idea, because if you look at, at least, and Jose could probably speak more to this, but if you take into account the state of the Venezuelan oil industry, you can't just like, get some concessions from Maduro and say like, okay, we'll, relax sanctions and suddenly expect that Venezuelan oil is going to come onto the market and, displace Russian oil, or it's going to be able to like fill a void that sanctioning Russian oil left. I think that comes from people who don't understand the Venezuelan oil industry and what has happened to it over the past almost 10 years. And, the kind of investment that would be needed to get it really back up and running to the point where it could really compete with, I guess, Russian oil, if it ever even could. I mean, like, and they look to this license that Chevron got to export some oil, and I look at that license and I see that was basically the result of Chevron lobbying the government really hard to be able to export some oil in order to recoup losses that they suffered because of the sanctions. It's not because they're like planning to make a lot more investment in Venezuela, and this idea that like you could invest $5 million or even $100 million in the Venezuelan oil industry and suddenly get it back up to where it was, I think is not really understanding what has happened there. And also, if you look at the people, or you look at globally, who wants to invest in Venezuela, I'm pretty sure that the biggest people are Russia. I thought Russia was interested in it. Russia, Rosneft is more interested in it than others. So I just, I find that policy or that idea very short-sighted.
Yeah, and this is for the one of you. I mean, again, given that Russia is so involved in the country, and now we're seeing Iran's always been involved, but lately we see them more involved. does that, because, those two countries are sanctioned right now by the U.S. as well, is that going to be a roadblock in addition to the roadblocks that are already in place? Jose, you want to speak to that, or Ellen? Anybody, jump in.
Oh, I'm gonna defer because I'm not an expert in the Venezuelan oil industry in the way that Jose is. I'm just going off of things that I've learned from him and over time. So I'm gonna bow out of this one.
Okay. Jose, do you have any thoughts on that?
Yeah, well, I definitely agree with all of Ellen's points, and yeah, I mean, you need lots of money to to try to bring our production back to pre-1999 levels. I mean, we used to have a very close oil relationship with the U.S. There were plenty of U.S. oil companies present here, such as Exxon, such as Chevron, such as ConocoPhillips, Conoco. But yeah, I mean, after different cases of nationalizations, expropriations of assets, and all that happened during the former Chavez era, I mean, that's what happened here. Of course, I mean, it's not going to be easy. It won't be easy for Venezuela to and the U.S. to get back to the relationship they had previous Chavez era. But I mean, you have two presidential elections next year, such as in the U.S. and Venezuela. We might have another political landscape in both countries or in just one country. So, I mean, nobody knows. It's kind of uncertain. I mean, the problems present here with our oil industry are lots of them, in the refining sector, in the oil production sector, in the exploration sector. I mean, you name them. So it's not going to be easy. But I mean, the point that I made previously is that, I mean, if other, were the situation, we could have had a tremendous opportunity to, because of our geographical proximity too. I mean, for Venezuela to ship any cargo to any U.S. southern ports, we'll have, like, I don't know, for 4 days, 4 days, or 5 days, I mean, if others were the situations, surely our relationship with the U.S. in terms of oil trading would be different.
Awesome. Thanks. And then for the last few minutes, and then before we do a round, I kind of wanted to hit on the EU a little bit. And this would be for Chris. I mean, the EU obviously, had energy crisis last year with skyrocketing prices, et cetera, et cetera. They seem to be kind of complacent right now, thinking that everything has, all the troubles have passed because they had this mild winter. And I think gas stocks are still at 68% right now, which they're normally at 48%. So they're still doing well in that respect. But do you think that's kind of premature for them to be as complacent as they are, because they're they had this big crisis, and then now they think it's passed, and so they're back to doubling, tripling down on their green initiatives?
Well, sort of yes and no. I mean, I think, as I mentioned, you looked at its EI report, that there was so much extra capacity coming online, or which could come online, and is now coming online. And I think in the short term, they're happy because, as you've seen, prices are actually lower than before the invasion. And I think in the sort of slightly longer term, when East Med gas and Algeria and all these projects in Tanzania, when that comes online, they'll be fine. But I think you're right. There's a bit in the middle, which is that's where it's going to be tricky, because right now, they've got through the winter and they're buying all the energy they can get. But this all has to be paid for, and I think there is going to be this hiccup. And the other thing I think to remember, which is slightly, I guess, political, is that the Russia thing's not done, because I lived in Russia. The oil and gas keeps them alive. The economy's shot. It was shot when I was there, and it's way worse now. There's 120, 30 million people who exist on these revenues because nothing else works. Okay, and those revenues have now been torpedoed. and they won't be replaced by China because China will drive down the price and so on and so on. So I think there's going to be this second shock. That's really more of a political thing. And the other thing I wanted to mention is the Russians didn't understand with the invasion of Ukraine. And when I lived there, they used to be amazed that they'd all these human rights things that we talk about. You know, I remember we were there when they were fighting in Chechnya. We, tell them this is so bad. Then Tony Blair comes to see him in St. Petersburg, and then he invites him for a state visit in a carriage to meet the Queen. So the Russian diplomats will say to me, well, you guys are never serious, are you? And every time we do something horrible, you make a big fuss, but nothing actually changes. But what they didn't understand is that this invasion is different because the West was frightened. And that's what makes it different from Iran or Venezuela or all these other things. This one scared us. It scared the Americans and it scared the Europeans, particularly with, because they know that China's watching and thinking, if Putin can do Ukraine, maybe we can have a pop at Taiwan or South China Sea. And I think that was the difference, which is not answering your question, I know.
That's okay. That is still some good information. I don't know, Ellen, if you want to talk about that. My question really is the crisis over in the EU, which I personally don't think it is, because it took years for it to get there. And I think that it's just a lull right now, but I think they're and they seem to suddenly be on this green thing all again, right? You're having banks saying they're not going to fund, oil and gas anymore. And, you just had the EU is now suing Croatia, Hungary, and somebody else for not having, enough ESG. So it seems like they're just doubling down on this. And your thoughts on that?
Yeah, I think I'm a little more, and I have not lived in Russia, and I don't know the state of its economy otherwise, but I do think that that yes, Russia's oil revenues have been hit by this, but I don't think that that it's necessarily having quite as deep an effect. I mean, we're seeing, there are a lot of reports that Russia is making up for revenue that it lost on the decreased price of Urals blend by, charging all sorts of money for insurance and tanker fleets and all of these other kind of ancillary services. And that may not necessarily, make up for, say, high oil prices that it would normally be getting revenues for. The oil sanctions are biting as much as they say. And I also think you have to take you have to look at it. You can't necessarily assume that Russia is going to behave, or Russian people, or the Russian government is going to behave the way a Western economy might. I mean, look at Iran. They've had severe oil sanctions for years and years and years. Their economy is completely shot. They've had crazy inflation. Their standard of living is plummeted. It's not good living there. But the government is still there. It's still got a very strong hold on their people. Every time something flares up, everyone's like, "Oh, could this be the big revolution?" And then it doesn't happen. And so I think that you can't just assume that hitting Russian oil is going to, cause the economy to collapse really soon and cause, them to withdraw from Ukraine or whatever the goal might be. I think you have to kind of look at it as much more of a long game. Like, sanctions are one tool, but they can't actually bring about like the downfall of a government. So I think that's an important thing to consider. And I think that Europe skated by this winter. They were so lucky because it wasn't that cold. But next winter could be a completely different story. Or we could have a really, really hot summer that could deplete natural gas stores. I mean, they made themselves so dependent on Russian natural gas, and some of the indications are that Germany would very much like to return to that state of affairs, or at least some politicians in Germany would like, when this is all over, to continue to import massive amounts of Russian natural gas. I think they're going to find that they're burning a lot more coal if they want to keep their people they want to have electricity, if they want to keep their people warm, and they want to keep the lights on in a winter that is, colder than normal. And so I think this winter should not be an indication for how things are going to go. Maybe they'll get some really great LNG contracts in place, but it's still going to be way more expensive than Russian natural gas was.
All right. Well, we're getting to the end, so I will do my final round, as I usually do, and just let everybody have one final word, kind of what we should be, anything that we didn't discuss that you wanted to talk about, or, what are the areas and where should we really be focusing on as far as, as being, investors per se. We'll start with Chris.
Yeah, look, with the Russia thing, I didn't mean to say that I think that Putin would fall and democracy will break out. He may or may not fall, but what I mean is it's going to become much nastier because things are already pretty tough, and I think is the next couple of years they're really, I mean, they're in trouble already in Siberia or anywhere outside of the big cities, and this is going to make the crisis much worse and make them a much nastier, well, even nastier than they are now. That's it, really. I mean, I just think the green thing, I just think it would be shelved. I don't find any oil company who's in the least bit worried that they can't just dig up as much gas as they can. I think Europe is so desperate for gas that that these projects will go ahead. The only other thing is the Nord Stream. What fascinates me about the explosion there, and I would say it probably was the Russians, but nobody wants to talk about the scene of the crime, because you could tell if it was done by these pigs, these cleaning things that drive along the pipeline, the explosion would have gone outwards. If it was somebody else, then the explosion would go inwards. But I noticed that the Scandinavians being very coy about the forensics. So that's the final word, really.
Well, thank you. Jose, do you have any final words? Or where do you see really good opportunities in say, Latin America right now?
Sure. Well, as I said, I am keeping my eye on Guyana. Guyana will be, I mean, if it doesn't screw it up, I think it will be tremendous to watch how it will, hike its oil production. Brazil, despite all the fears that still remain over this Lula new term, and of course, I don't doubt that there will be still political turmoil between Lula followers and former President Bolsonaro followers, as we saw at the beginning of this year. But Petrobras is still a solid company, so I'm keeping my eye also on how Petrobras and Brazil will perform. I mean, those two spots will be crucial to see, and of course, Venezuela. I mean, I live here, I'm based here, I come from the oil industry, so I'm still keeping an eye and my hopes on Venezuela as well. Thank you.
Thank you, and Ellen, final words or final thoughts.
Final thoughts. I just think that this is, there's a lot of volatility and there's a lot of big questions. I think, and we didn't even really talk about this, but the China demand situation is just a huge question mark of when and how. And I think that is having a really big effect on the market. And so I just think that there's a lot of volatility because everyone's just kind of waiting for things to happen. No one's really quite sure what's going on with Russian oil. I do think that as we kind of get further in time, we're going to get more information about how much Russian oil is being exported and how much money they're making and where it's going to. And but if this situation continues, Russia is that just incentivizes Russia even more to develop its own, fleet to ship oil. It incentivizes it to basically make these things very permanent and to kind of form this permanent kind of shadow market for oil. And as we saw with, Iran, when oil prices in general go higher, which I think we all think that that's generally going to happen because there's just such a lack of investment that benefits those in this kind of shadow oil market. And so I think that we'll find that they're probably making more money than we think. Though I do agree, it's not like it was for Russia. But I think that is, something to keep an eye on. But it makes the whole market more opaque. And that generally is not so great for the market, but it's certainly another area to kind of focus on and keep abreast of as it develops.
All right. Well, I want to thank each of my speakers for coming on today. Follow all of them. They're all fantastic. Follow at Place Your Trades to find out when we have other spaces and events going on. Also, Anthony Crudele is on his YouTube channel right now, coming up next at 12. If anybody wants to listen to Martin Peltier and Bob Elliott on to discuss CPI data and what it means for the Fed's next move and how that impacts stocks, oil, gold, etc. It looks really exciting. Both of those guys are great. So head on over there. That starts at 12. Again, follow at Place Your Trades, follow all our guests. Thank you guys for taking time out of your day today. I really, really appreciate it, and hope to have you all back sometime. Thanks, everyone.